All right, if you've had your eye on the markets at all lately, you have definitely seen the headlines. After a pretty shaky period, Bitcoin is roaring back. So let's get into it and really unpack what's going on behind this massive crypto rebound. Okay, let's just cut right to the chase with the number that has everybody talking. Bitcoin didn't just climb, it surged past the $71,000 mark. I mean, that's a huge move that has the entire financial world buzzing. But a price like that doesn't just pop up out of nowhere, right? There's always a story behind it. So the real question we need to answer is what's actually fueling this incredible comeback? Let's break it all down. So before we can get into the why, we really need to appreciate the what. We are looking at a serious market rebound. And believe me, it is not just about one single coin. And yeah, this isn't just a Bitcoin story. The entire crypto space saw its value jump by a staggering $60 billion in, get this, a single day. This is a massive wave that's lifting pretty much all the boats in the harbor. So what's causing this huge wave? Well, we've pretty much nailed it down to 3 key drivers that are pushing everything higher. Let's jump into the first one. First up, things on the world stage have just calmed down a bit. Geopolitical tensions in the Middle East are easing up, and crude oil prices have backed off from their highs. When that happens, investors just feel more comfortable taking on risk. And love it or hate it, crypto is still seen as a risk-on asset. So when people feel optimistic, they buy. Second, and you're going to want to pay attention to this one, the big money is officially back in the game. We're talking about institutional investors. They aren't just dipping their toes in anymore. They are making serious moves. We saw hundreds of millions of dollars pour into those spot Bitcoin ETFs, which is just a massive vote of confidence. And, as analyst Nick Pukrin points out here, that flashy price number isn't even the most important thing to watch. The real story is that steady, consistent flow of cash into these regulated ETFs. That suggests this rally has a much more stable, mature foundation than some of the wild rides we've seen in the past. And finally, we've got some help from politics. We're seeing clear signals coming out of the White House that seem to be defending the digital asset space. Now, regulatory fears have always cast a long shadow over crypto, so any hint of a positive policy shift is like rocket fuel for the market. So, okay, we've got a calmer world, a flood of institutional cash, and some political support. But does all of this actually add up to something new? Could this be a sign that the crypto market is, finally growing up? Some experts, like Nigel Green here, they certainly seem to think so. He's saying that the old peak is absolutely not a ceiling, and that once the momentum really gets going, we could see brand new all-time highs before this year is even over. Now that is a very bullish take. But hold on, it is not all one-way traffic. While those inflows were absolutely massive, it's also really important to see that there have been some pretty big short-term outflows too. As this chart makes clear, there is a real push and pull dynamic happening. This is definitely not a straight line to the moon. And if you want a perfect snapshot of this whole complicated mess, just take a look at Ethereum. On one side, you have signs of strength, it's holding on to key support levels, but then you look at the other side, the reasons for caution. Trading volume is super low, and some of the technical charts are flashing warning signs. This kind of mix is exactly what a maturing, but still very volatile market looks like. So, with all these competing signals, what's the tiebreaker? Well, it turns out the entire market is kind of holding its breath for one specific piece of data that could decide everything. And that is the Consumer Price Index, the CPI. Put simply, it's the number everyone watches to see where inflation is heading. And what happens with inflation directly impacts what the Federal Reserve does with interest rates, which in turn moves every single market out there, including crypto. And here's why it's such a massive deal. The last time we got a CPI report, back in January, the number came in a little cooler than people expected. What happened? The crypto market rallied hard. Now, with the February number expected to be a little bit higher, that big question mark on the screen says it all. What's going to happen this time? It really all boils down to 2 possible paths. If that inflation number comes in lower than expected, it could mean the Fed will cut interest rates sooner. That would likely send Bitcoin rallying higher. But if inflation comes in hot, it could spook investors and send the price pulling back to lower levels. Okay, so we've looked at the effect, the causes, and the bigger context. What's the real takeaway from all this? What's the bottom line? Here it is. Bitcoin's latest rally is not just empty hype. It's actually backed by real institutional money and a friendlier political vibe, which suggests the whole market is growing up. But, and this is a big but, it is not entirely independent yet. Its next big move is still change to the wider economy. And that puts the entire crypto world at this really fascinating and frankly critical crossroads. And that leaves us with one final big question. Is this new, more mature version of crypto finally strong enough to carve out its own path? Or is it still just a passenger, getting tossed around by the currents of the traditional global economy? That, right there, is the multi-trillion-dollar question. Thanks for tuning in.